All right, ladies and gentlemen, NIO reported this morning up 10.5%. My goodness, what a day NIO is having. Now, here is the funny thing. I did a video on NIO a while back, and guess what kind of price target I got for NIO? $10.71. I said this stock is a buy between $9 and $10. The video got a ton of dislikes, a ton of hate, but guess who was right? It is me looking at the fundamentals, taking my emotion out of it, taking the storyline out of it, and just looking at the pure numbers. And what happened? It hit a low of $8.38. And I know a lot of YouTubers out there that were recommending this stock over $20 a share. And I said, you must be high. No way in heck am I paying that much for a company, burning that much capital. Yes, they are growing top line. Yes, they are innovative. Yes, they're in an amazing market. And yes, they make a great vehicle. But does that make it a good business, folks? That's the question you have to answer yourself. And that's how I arrived at a $9 to $10 price target. And right now, even though it's up 10%, could still be a buy. But let's get into the report. Total vehicle deliveries were 31,607 vehicles, which represents an increase of 29.3% from the third quarter of 2021. And we can see that right here. Vehicle sales were just under $1.7 billion for the third quarter of 2022, representing an increase of 38.2%. Guys, this is definitely what you want to see. 30% growth. Vehicle margins are at 16.4% compared with 18% in the third quarter of 2021 and 16.7% in the second quarter of 2022. Margins are heading in the wrong direction. We're going to have to update that in the model. Gross margins are 13%. You know, that is not good to see here, guys, as compared with 20% in the third quarter of 2021 and 13% in the second quarter of 2022. So they did tick up a little bit from the second quarter, but obviously, guys, we want to see those margins expanding. Loss from operation is pretty substantial here, $544 million on almost $1.7 billion in revenue. That's pretty disgusting. This loss represents an increase of 290%. By the way, if you like the no BS approach and just putting the numbers out there and being honest with what you're seeing, consider subscribing and smash that thumbs up. I really do not like pumping up stocks here. There's some good things about the growth that I like, and obviously the burn rate and the cash coming down is a massive problem. Now, I'll have to listen to earnings call to make sure there's nothing I'm missing, but just looking line by line here, I would say there's some concerns with the cash rate and obviously margins. When we bring it down to a per share basis, they lost 36 cents a share. And we can see here, ladies and gentlemen, steady share growth at 1,640 million. They are still diluting, and their operating margins are obviously still disgusting. Their growth rate is still remaining very strong. So a lot of things to think about here with NIO. I would say there is a lot of risk with this stock, but we're going to plug in the numbers and try to get a price point on this company. On October 7th, NIO unveiled its products and services for Germany, Netherlands, Denmark, and Sweden at the NIO Berlin 2022. So here we go with the expansion. They're expecting a very strong fourth quarter. All right, guys, so good news is I do think that we can kick this up by 1%, and they just get under $7 billion in revenue. I ran the numbers. That's about what they're going to do if they project that they're going to have a very strong fourth quarter. So we weren't that far off. We were basically 1% off. It looks like maybe they can push $7 billion in total revenue, but we're going to err on caution and say that they do roughly 28%. From there, I'm going to go down to 20% growth and then have them doing 28% growth years 1 through 3, which puts them just below that $7 billion mark. And that's about where it seems like they're going to hit. From there on, I have them doing 20%. And then from there after, we have them doing 17%. EBITDA margins are atrocious. For the quarter alone, they're already burning $577 million. I have them for the full year burning almost $700 million, which is way underneath. But what we need to look at is, are the margins going to get better as they go? And I believe that they should get better if you're investing in this company. So we have negative 10% margins until 2024. Thereon, we have them growing their margins to 5%. As we can see here, their EBITDA margins are negative 16. So I'm projecting that they're going to get their margins to about negative 10 over the next couple of years. When you look at a company like Tesla trading at a 36, 37 EV to EBITDA, the sector median trades around 8 or 9. I feel comfortable putting between a 13 to 14 EV to EBITDA because they are maintaining growth. So we're going to use 13 EV to EBITDA. So a 12 EV to EBITDA gives us an $8.18 stock. A 13 EV to EBITDA gives us basically a $9 stock. So how did NIO lose value? Their operating income was negative 34%, which is absolutely atrocious. They diluted roughly 7 million shares on the market. So while, yes, they are growing top line, the other impacts are actually ruining the fundamentals of the company when I run my analysis, which means I get between an 8 to about an 850 price target for NIO now. So even though the stock is pushing up 11.5% today, when I look at what's really going on and I plug in my numbers, negative 34% operating margins is a massive problem. Diluting is a massive problem. Margin shrinking is a massive problem. And yes, they could have a tremendous fourth quarter. If they can't get the margins in the right direction, they're just burning more capital. And so when you plug all that into the analysis, that actually brings the price down on my end. So no biased opinion here, not a bull, not a bear on the stock. I actually think it's a very nice car. I think they're very innovative and they're growing unbelievable top line. Definitely seems like there's some underneath fundamentals that need to be fixed with the company and the fact that there's so many shares out on the market. Once again, guys, I did give a price target between $9 and $10 8 months ago. So before you dislike this video, just remember that I did have that price target and the 52-week low on the stock is at $8.38. So I'm basically saying it needs to get back to the 52-week low in order to be considered a buy. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.